Hello, everyone. This is Joe Gentili. I'm a partner at the law firm of Saraf Gentili LLP. And one of the areas we really focus on is life insurance litigation. And a hot area in life insurance litigation where we're just seeing cases multiply very quickly is in premium financing. And premium financing at its core is very simple. It's where somebody takes out a loan, usually through a bank, in order to finance the purchase of life insurance. And over the, last decade or so, these this was a very commonly used tool to finance the purchase of premium life insurance, I'm sorry, of permanent life insurance, particularly for larger policies. And there were some practices that were out there in the sales that led to a lot of problems and is now leading to litigation. I just want to lay out a few things that are just true about premium financing that you should keep in mind if you're thinking of buying a policy or if you've already bought one. We can get to that later. So the first thing to keep in mind is that it's not free insurance. There's nothing free about this. And unfortunately, a lot of people, that's how this was pitched to them, that you're going to borrow money at a certain interest rate, let's just say 4% for the purposes of keeping things simple, and you're going to then use that loan to invest in a life insurance policy, and it's going to credit 6%. And so over time, that since you're making more money on the policy than the interest is costing, you're going to pay off the loans with the policy cash value. And at the end of the day, you're going to have a free insurance policy. That's just not true because those crediting rates are not guaranteed, not even close. The cost of insurance in the policies, if they're index universal life insurance policies, that's not guaranteed. The interest rates are not guaranteed. So there's a lot of ways these can go wrong. And if you end up with a situation like we've had in the last few years where interest rates have gone up, crediting rates on some of these life insurance policies have gone down, that's led to large collateral calls for some people. And so it's not even close to free when you factor in the risk. Number two, if you can't afford to buy the policy without financing it, don't buy it. Um, see point number one, there's a lot of risk in using premium financing, and if you can't easily absorb that risk of things not going well, and you can't absorb the risk of a collateral call, you can't absorb the risk of increased premiums or having to pay more of the premiums, don't do this. Who this is probably suitable for is for the very high net worth person that chooses to have the premiums financed because they have other uses for their liquidity that they think they could get a higher return. However, if they're wrong about that, they can fund the premiums for the life insurance policy, and it's not going to turn their financial world upside down. So if you can't afford it without financing, don't use it. Number three, it's not a retirement plan. One of the big red flags that I've seen, especially when you're looking more down market to people with, I would say they're well-off people, but not ultra high net worth, is that premium financing is being sold as a retirement tool. So for a long time, permanent life insurance has been used, or at least the cash value accumulation in permanent life insurance has been used to help supplement um, retirement spending. It's a generally it's a good asset to have in retirement for a whole host of reasons. But when you're attaching premium finance to it and the risk attached to that and the potential for these cases, if the assumptions that you have in terms of the crediting rates and the interest rates, if those go bad, it's not suitable for as a retirement planning option, especially given the fact that for many people who are being pitched this, if these cases don't go well, it could end up consuming most of their net worth. I've seen that a few times where just the scale of the risk, if the assumptions that the person is being illustrated don't hold up, the scale is just tremendous for them. And so this is not suitable as as a retirement plan. And also just related to that and unrelated, I'm sorry, related to the idea that this is not free insurance, is premium finances is not a reason to overbuy the amount of coverage that you need. So life insurance, first and foremost, is a protection tool. The main purpose of it is to get a death benefit. So if you're overbuying on it, on the idea that this is a really cute way um, to build up free cash value, it's don't do it. There's so much risk baked into that with premium financing that it's not worth it. And just on the same token, if what you really need is, $2.5 million of coverage, but you could afford five if you borrow and use this premium financing to pay for that extra amount, don't do it, because the reason you're probably being steered in that direction is because the inherent risk that leverage brings into the life insurance transaction is being undersold to you. So these are tips that I would give to people that are considering premium financing to purchase. If you've already bought a life insurance policy and you've used premium financing for it and you've gotten a collateral call, or you're just seeing that this is not what you were sold, you were pitched the idea of using this in retirement, that it's free insurance, you bought way more insurance than you needed. If you're already at that point, then I would suggest consulting with an attorney that's familiar with life insurance, and do it sooner rather than later. One of the frustrating things for me in this area as a plaintiff's attorney that litigates cases is that the statute of limitations in some states to bring claims related to being misled in a sales process is very short. And just the nature of life insurance is that sometimes it takes people a while to figure out what exactly it is that they were put in, and then it's not matching up with what they were told. So if you're at that point where you're starting to have doubts and you're seeing that this may not be what you were led to believe it was, or you're at that point again where you're getting the collateral calls, I would not hesitate in contacting an attorney, because you may have less time to act on this than you would assume. So that's all that I have for today. And if you found this useful, I really encourage you to subscribe. We're going to be making a lot more videos on this topic of the intersection of the law and life insurance. Thank you and have a great day.